Young, great to have you back. We put together a few nice data points there between Taiwan and what Broadcom said. Do you think that builds?
Those are some nice data points, and it does point to some of the end market dispersion. Although we have an inventory overhang that a lot of people are worried about, there are some areas that are doing well, and we think overall that's going to offset some of the weaker areas. And probably investors really want to be positioned into the end markets that remain strong, and there are some healthy end markets still. So I think that's the data points that we're seeing, along with pretty reasonable valuations when you look at Broadcom and some other technology stocks.
I did read a note from someone else on the street, I think it's JPM. Long-term investors should not lose sight of the multi-year, 3, 5, 10, 15-year track records of outperformance. I mean, should we start thinking that way again, or are you too leery to go long-term right now?
I think for the end markets that we think are going to hold up well, we should be thinking that way because we do see reasonable valuations that have come down a lot in these spaces. And we do think there's going to be an economic soft landing. So even with somewhat of an inventory correction, we expect the industrial sector to hold up. We expect autos, especially EV, to hold up. Aerospace and defense, cloud computing, artificial intelligence. You really want to be geared toward those end markets, which have a lot of runway, multi-year trends ahead of them. So it is a good time to start thinking about that and picking up those names that play into that.
Young, how much attention should we pay to the fact that Hock Tan was not tipping his hand at all when it comes to expectations for calendar 23? When it comes to how much growth there will be, he was very reticent. And we've got this inventory situation that we keep talking about. How clear is it how much of that's going to be out of the way by the time we're in 23?
Well, that's what's interesting, right? Typically, when you get that kind of response or that kind of prevarication, the market doesn't take that well, right? But the market, given everything else that's going on, given the strong guidance, at least for next quarter, given the increase in dividend and given the low valuation, I think when we balance these things out and start thinking about longer term, we can still be reasonably comfortable with some of these names that play in the strong end market. So, no, you'd like to hear more clarity, but nonetheless, I think the market's getting this right.
That said, it does sound like you maybe are reserving some caution for consumer-led end markets, especially given some of the inventories we've been watching in hardware.
That's right. I mean, if we do want to be respective of the idea that inventories are high in some of the areas for semiconductors, and some of the end markets are softening and probably going to soften for a couple more quarters still. So the consumer-led areas, they play into areas such as PCs, that play into TVs, play into consumer gadgets. We think those might still have more correcting to do. But even within that, there's some dispersion because, as we saw from Taiwan Semi, the high-end smartphones are doing well. So, you really want to think about what end markets look like they're holding up well and think about where the dispersion is going to be.